Hello, everyone. My name is Mark Sachs, and I'd like to welcome you to this webinar, in which I'm going to show you a significant amount of information about right line trading software, how it works, what our strategies are. Since this is our own hotcom room, I don't have to rush through it, but I'm going to move as quickly as I can because I know. Everybody has a lot of things to do, and I really appreciate everybody showing up today. And just a little bit about myself. I'm a graduate of the University of Pennsylvania. I'm a former professor at Jefferson University in Philadelphia, and I've been involved in the financial markets for over 20 years. And I began trading the futures and forex markets about 10 years ago. And more specifically, I've been involved in the optimization of software systems for the last 10 years. And when I first looked at day trading as a profession, I looked at a lot of expensive software, and I saw that there was one feature about them all that they all had in common, is that they did not work for me. They did not provide me with low-risk entries that had a high probability of at least hitting my first target. They performed extremely poorly in chop. And since markets are in chop 70% of the time, it's very important that the trading software clearly define chop and allow you to avoid trading during this time. Now, some of the systems had very sensitive trade triggers. They got you into winning trades early, but they also got you into many losers, and these losers were false breakouts. Because most of these systems are anticipatory momentum breakout systems. When price moves some percentage of the average true range, they're going to trigger you a trade either long or short. If you're sensitive, you're going to get into these moves early, but the downside is you're going to get into a lot of false breakouts. The other systems had more specific trade triggers, so they got you into fewer false breakouts. But the downside there was that when you did get into true breakouts, your entries were late. So I did a lot of reading on the subject, and I looked at what I felt was important to include in a software system. What elements were important to allow you to optimize the accuracy of your trading entries and provide you with the best trading strategy. Now, at first, it seemed like it was important to have an oscillator. Now, oscillators can be in the form of a stochastic, relative strength, the CCI. They pretty much all crunch numbers the same way. They look at the relationship between the high of the move, the low of the move, and the close of the move. And then you needed a MACD based indicator. There's a lot of different settings for MACD based indicators, but really they all also crunch numbers the same way. They have a slower moving averages, which is the signal line, and then a faster moving average. And when the faster moving average accelerates away from the signal line, then momentum is moving to the upside. And when the faster moving average is decelerating into the slower moving average, then momentum is moving to the downside. The third component was volume, which we have removed and added order flow. And I think order flow is a much better parameter to evaluate than volume in terms of looking at executed orders at the buy, at the bid and ask on each given tick of market movement. And then 5, most importantly, I think, is market structure. You have to define market structure, and your indicators have to take into account market structure in order to provide you with appropriate entries. And I know that everyone is always looking for that elusive confluence of indicator signals that are ultimately going to provide you with an incredibly accurate market entry that either long or short is going to give you such a high predictive value for taking a winning trade that you're going to wind up being profitable just taking a blue dot for a long or a red dot for a short. But in fact, there is no indicator confluence like that that exists. And the only way possible that you can obtain repeated profitable trades is by taking heavily into account that of market structure. And then finally, a very important component that most software systems are not able to do is, in fact, I haven't seen another one that does, is that of fractal analysis. And that is our indicators assimilate data from multiple time frames. And I think it's pretty clear I'm sure it's clear for everybody in this room that it's very, very difficult to trade a single time frame. I mean, it provides you with greater precision if you know what's going on higher time frames. And if you know what's going on multiple higher time frames, then your precision increases even more greatly. The problem is that looking at multiple time frame charts is very, very cumbersome and very, very difficult. And you got to use the crosshair, and you got to make sure that everything aligns. So what I did was I built into the key indicators of Rightline the ability for them to do their own fractal analysis. You're going to see that what these indicators do is they analyze data from multiple time frames, and their signals are based on multiple time frame analysis. Now, so we do this by looking at oscillator analysis, MACD analysis. We no longer look at volume analysis. We look at order flow analysis. And we look at market structure, and we look at fractal analysis. And what I've done is been able to place that into a simple trading platform that really provides you with remarkably accurate trading entries. Now, our methodology is really very, very simple. We do not trade or call tops or bottoms. We do not trade reversals. We do not counter trend trade. We are purely trend traders. We only trade with the trend. And it's my belief that institutional traders set the trend, and we want to be on board with them. So it is our goal at Rightline to define a trend early and get you on board fast. So we wait for market structure to define the trend. We don't wait for a breakout. We don't try to call a breakout. What we want to do is we want to see a trend intact, and then we want to take an early retracement into the trend. And those are one series of trades that I'm going to go over with you. Now, all of our entries are based on fractal analysis and market structure analysis. And I'm going to go over each one of them, and then I'm going to show you the platform. We have a 2-line break, a 3-line break, a power entry, a C-candle entry, a momentum entry, and a strategy entry. And I'm going to show you what each one of those, how each of those work. Now, there's some people, I was talking to a few people today, who only take 2-line and 3-line breaks. These are really, really remarkably accurate. And the predictive value of these trades is very high, between 80 and 90%. So if you decide to use the software, you may pick a few of these entries to stick with and kind of make them your bread and butter trades. Now, these are the 3 lines. The key lines are the first and third line. Now, the first line is order flow. The second line is stochastic direction. And the third line is momentum direction. Now, this really is really our only indicator. Everything else, this is the only indicator that shows below price action. Everything else is read right off the price bars. Now, if the line is red, it means that either order flow, stochastic, and momentum are down on all time frames. If the line is green, it means that order flow, stochastic, and momentum are up on all time frames. If the line is blue, it means that order flow, stochastic, and momentum are up on the longer time frames, but down on the shorter. And since longer term time frames rule, you can take a long trade when the color is blue. If the line is orange, you have order flow, stochastic, and momentum, which are down long term, but up short term. And again, since longer term time frames rule, we go with the longer term direction, and we can take a short trade on an orange colored signal. So let's take a look at our first trade. And the first trade, or the first signal that we have to take a trade, and this is called a break of the 50. Now, it can be either a 2-line break or a 3-line break. Now, remember, we only trade with the trend. Now, here, and I hope you can see my cursor, this is just a 50-day simple moving average. Nothing complex or difficult. Now, this is a proprietary line we call the right line trend line. And these define our trend. Now, sometimes this will move with the 15-day simple, and sometimes this will move with a 15-day exponential, but they'll crisscross. So this line acts a little bit differently than both of those lines. Now, when the line is yellow, it defines chop, and we don't trend the market under any circumstances. Now, when the 50 is green and the modified 15 is green, and you break the 50 with a 2/3 candle close, and the candle is surrounded in blue, this means that you have order flow, stochastic, and momentum with you on the trade. Now, and that makes the predictive value of these trades between 80 and 90% success. Because order flow, stochastic, and momentum are with you on multiple time frames. Enough at least to push you into a first target. And when we talk about a successful trade, I don't think anybody can tell you how far a trade's going to run. What they want to do is get you to a profitable trade. And in our particular case, based on our money management strategy, that's going to be a first target hit. Once you get to the first target, the trade is profitable. If it then goes on to run, and you get a second target hit, it's more profitable, and then hopefully you're going to go on to get a runner. Now here's just, I think it's a little clearer example. Again, this is the 3-line break. A break of the 50, order flow, stochastic, and momentum are with us on multiple time frames. We take the entry at the close of the signal candle, which is the candle that breaks the 50, and then up we go. Now here's the same trade to the short side. You can see that the 50 and the 15 and 50 are down. And remember, we're only trading with the trend. We break the 50 to the downside. Order flow and stochastic and momentum are all heading down, and we take the trade to the short side. Now, you can not only break the 50, but you can also break the modified 15. And here is a break of the 15 with a 3-line signal. The 3 lines, both order flow, stochastic, and momentum, are all to the downside. You can see you cleanly break the 50, at least a 2/3 candle close below the modified 15, and you're going to get yourself into a very, very nice short trade. And you can see that we are always trading with a defined trend. This is sort of a little bit of a breakout trade, but we're really breaking out of the direction of what clearly is a downtrend. Here's the same trade again to the upside. It's a 3-line signal. Now the thing is, we cannot take a trade long until the 50 and the 15 are both green. That's because we are trend traders, and we let the 50 and the 15 define the direction of the market, and define market sentiment. We want them to align. Once they do, we get a 3-line signal. Order flow, stochastic, and momentum are in our direction, and we can take the trade to the upside. Now, this is a trade that's based on market structure, and these are retracement trades into a defined trend. And these are the most conservative trades that we have. Now, on this particular trade, you can see that the 50 is red and the 15 is red. So we know that we're in a confirmed downtrend. Now, we couldn't take a break of the 50 to the downside because the 50 was heading up. It's green. So we have to wait to the 50 to roll. But our anticipation, as long as the 50 is green, is that the market's going to retrace to the 50 and push back through it. Our anticipation is that we're not going to fall until we get the 50 to roll to the downside. So finally it does. And what we get is a move through, a retracement, and then the C candle that engulfs all of the buyers that are stuck in this B candle, and that are then engulfed by all these sellers. And the entry is 1 tick below the close of the C candle. Now all of these, the A, B, and C configuration are all generated by the software. As soon as 2 candles of the same color in a row are generated, the software will print an A. And it will continue to print the A, and you're going to get this line that defines the downtrend until you get a B. And a B is a pull-up in a downtrend or a pullback in an uptrend. And I have just chosen personally to color my B candles magenta. And you're going to get an audible signal when the B candle prints, which tells you there's a chance for the next candle. 8 range. These are all 8 range signals. And what this tells you is that this C candle has the potential to engulf to the downside. Now, if it does engulf, we have a range maker which tells us where the close of the range bar is going to be, and that's why I like to trade range bars. Is at the open of the range bar, we have a really good idea of where the close is going to be, and the range maker tells us that. So we have our sell stop already waiting at the close, 1 tick below. Now, if the C prints and the move goes 1 tick further down, you're in the trade. Now, if the C never engulfs the B, then this entire formation disappears, because there's no reason to leave it up, because the ABC formation never materialized. This is only the chance for an ABC. Now, if the C prints and you're in 1 tick below and the move is overrun, you're going to see the C candle as printing. You're probably going to be in 1 tick below, and you're going to see it as a loss as price action moves back across the C in the opposite direction. So this relies heavily on 2 things. 1, market structure. We've got to be below the 50 and below the 15. 2, we need to have a retracement into a confirmed trend. And 3, we want to trap all these buyers who try to buy the market and turn it up, and were unsuccessful, and then get engulfed by all these sellers. And the C candle retracement is the most powerful retracement we have, because it's pushed down by 2 forces. One is the addition of new sellers into the market, and the other is the fact that as all the unfortunates caught in the B candle get stopped out, they're going to be buying back their contracts or selling their contracts, buying back to sell, and it's going to help push the market even further to the downside. So you have 2 separate forces. These people being stopped out and new sellers coming in. Same trade again. Now, basically, you can see 2 trades here. Now the C candle, as I said, is a retracement entry into a confirmed trend. And on this particular trade, this is a two-line signal. We have order flow and we have momentum, but we don't have stochastic with us. Correct. Thank you, Leo. That order flow and momentum are with, in addition to the C, you also have order flow and momentum with you. Now, there are a lot of other people who trade the system who will only take a trade if they have a two-line or three-line signal. They want to go into a trade, even if it's a C that engulfs the B, in the direction of both order flow and momentum. And you don't have to look down at the three-line. All of that is already telegraphed to you intra-bar by simply looking at price action and looking at the candlesticks. So you never really have to take your eyes off of price and look down at the three-line to see which lines are red, which lines are orange, which lines are blue. You want to trade the three-line or the two-line to the downside, out of the three-line or the two-line to the upside. You can see what a great break of the 15 this is. And then if you get a retracement on a 10-tick trailer, which is what we have, and you get stopped out, you're back into the trade on the C retracement into this confirmed downtrend. Again, here's the same move. And the one thing you're going to see is that we get the same moves occur over and over and over again. And you'll see that the market comes down, takes a deep retracement, comes down again, and then we get a C, we get a B pull-up that's engulfed by the C. And these are great trades, the ones that come right off the modified 15. You can see that the 50 is down, the modified 15 is down, the C engulfs all the unfortunate buyers in the B candle, and the ones that come right off the 15. And in addition, this C candle has 8 ticks of candle body. So there's a tremendous amount of selling conviction here. It's really tough to trade a hammer or a doji, but when you trade a C that engulfs a B and the C has 8 ticks of selling conviction, that really tells you that there's a lot of people, there are a lot of sellers piling into this market, and there's a really, really great chance that you're going to get a good move to the downside, at least to your first target. Now here's another one of our retracement trades into a confirmed trend. And this is our momentum entry. And that's signaled by the X. And this is when momentum alone, which is just one of the 3 lines, aligns on multiple time frames in the direction of our trade. You can see that the market moves up, retraces back right into the modified 15. Our 50's up and our 15's up. And we're up. Now, on a 10-tick trailer, I can't tell you if this would have stopped us out or we would have gotten the move all the way to the top. But if you didn't catch this move or you were stopped out, you have a re-entry right here on an additional momentum signal. Now, the momentum signal is the second most conservative retracement trade we have into a confirmed trend. But you can see the one thing that's true across every single trade that we take is that we only take trades when our software clearly defines the fact that we're an uptrend or in a downtrend. Now here's when we have both a momentum entry and a C candle, and if you look closely, the candle is surrounded in pink, which shows that you have order flow and momentum with you as well. I mean, these are terrific setups and terrific trades, because you have many, many things. Fractal analysis is telling that you have momentum with you on multiple time frames. The 3-line is telling you that you have order flow and momentum with you on less time frames, but they're still with you. And in addition, this candle engulfs. I'm sorry, this is not a C. I'm sorry, this is just a momentum entry. I'm sorry, with order flow and momentum with you. The pink outline. Let me just scroll down because this is really, that was just very, very similar to the trade that I just showed you. Now our power entry. Now all of them, this is the weakest, and this is the one that I'm the most cautious with. But it does define a retracement into a confirmed trend, and we want to take the power entries off the 15 or off the 50 as long as we see that both the 50 and the 15 are moving to the upside. And we're retracement traders. Or in the case of a breakout, a break of the 15 or a break of the 50, we trade with order flow, stochastic, and momentum. I mean, the system is really, really not difficult to master. And here are your power entry signals. The market moves down, retraces. The power entry is going to flash intra-bar. You know that if the candle closes at its bottom and you have your sell stop waiting, down you go. Now, depending upon your stop, you're probably going to get stopped out here, and then you just wait for a re-entry, and that comes on here, and down you go again. Then this is our strategy entry, and the logic of the indicators is all slightly different, but what they're all doing is looking for different types of pullbacks in which you only will take in the middle of a confirmed trend. You can see that the strategy entry fired here, but based on market structure, you have no trade. You can't take a short trade into a rising 50, and the 50 and the 15 are different color. So this entire zone here is defined by our software and our trading rules as chop. Finally, the market rolls and aligns. Now we have no signal to take a breakout across the 50. So what we do is we wait for that first retracement. We have now the 50 green and the 15 green. It pulls into the 15 intra-bar. We see the flashing of the strategy entry. We're in one tick above the close of the signal candle, and we get a great move to the upside. Same thing, just two more strategy entries. Pull back, up. Pull back, up. Now sometimes you're going to get multiple signals on the same candle. These are both C engulfing candles that come with strategy calls. I don't think that they increase the predictive value of the trades very much, as long as you get one signal, except maybe the 2 or 3 line signal when you're trading with order flow and momentum. And like I said, there's some people that will not take a trade unless the candle's surrounded in pink or for a 2 line, or yellow for a 3 line to the downside, or light blue for a 2 line, and dark blue for a 3 line to the upside. But these are very, very conservative retracement trades into a confirmed trend. Now, if this comes across as being complicated, what we've done, and this is a completely separate piece of software, is we have developed an AutoTrader which trades these signals. Now, the AutoTrader is brand new, but what it does is it takes entries on the most conservative signals that we have. It takes C candle entries, it takes momentum signals, and it takes 2 and 3 line break signals. And we formatted the AutoTrader based on looking at 1 year of market replay data and then running it forward for 1 year at 500 speed. And that's how we defined all our parameters. And now we're looking at it in a live market. And this is how it's done over the course of the last 5 trading days. It's done remarkably well, I think, in a very, very difficult market in February. It had 3 winners and a loser on the 19th for 120. Right now it's set to trade only 3 contracts. First target is 6 ticks, and second target is on a 10-tick runner. Later on, we're going to configure it for different types of, trading 6 contracts, 10 contracts, 2 contracts, and it's only optimized for 3 markets: for crude oil, for the Russell 2000 index, and for gold. On the 20th, it took 3 winners and a loser. On the 21st, it had 7 winners and no losers. I made $610 on 3 contracts. February 25th, 4 and 1, 310, and February 25th, which is today, it had 3 winners and 1 loser. I made $220. And basically, this just trades on its own. We optimized it from 8 a.m. to 2:30 p.m. in the afternoon Eastern Time. You just turn it on and let it trade. Each specific entry has its own unique trailing stop, which we configured to try to provide it with an optimal amount of profit. And it's really been rolling nicely. In 1, 2, 3, 4, 5 trading days, it's got well over $1,000 worth of profit. And this is totally apart from our discretionary trading. And this is not trading the market replay data. This is trading a live market. Now, in terms of money management, I put Forex up here because I just gave a Forex lecture. But basically, a Forex we trade on a 5-range chart, but on an 8-range chart, we're going to have a 10-tick initial stop. 60% of your contracts are going to come off at your first target, which is going to be 6 ticks, not 4. These are our targets for a 5-range Forex market. 20% are going to come off at your second target, which is 10 ticks, and then 20% are going to come off on a 10-tick trailing stop. And I'm really sorry that I didn't change this back to ticks and reformat this for an 8-range and not for a 5-range. But the Forex markets trade great, really, really great with this system. Now, when you're day trading, you really have to outfight the smartest people in the world. And not only are they the smartest, they're also the richest. And they have very, very sophisticated trading systems. And I believe that you can only take money out of their hands doing one thing, and that is trend trading. If you try to trade tops and bottoms, if you try to counter trend trade, if you try to call reversals, you cannot trade the markets profitably. There's no way to call when a top is going to come and no way to call when a bottom is going to come. We used to have a divergence as part of this system. We used to look for tops and bottoms, but as the system has evolved, we've simply pared it down and leaned it down to only look for trades in a confirmed trend. And that's the only way that we can spar with these kind of people. And unfortunately, we're going to let the other guy call the tops and call the bottoms. We're going to let the other guys counter trend trade while we stay with the money. And that's how we're going to go home 9 out of 10 nights with money in our pocket instead of other people going home with our money in their pocket. Now, really as part of what we do, I believe that education is extremely important, since 10% of our trading is discretionary. Now, we have tried to remove the discretionary component from this as much as possible, but there's always going to be 10% of pattern recognition that you have to develop if you trade the system. It is not a dummy system. It's not going to give you a red dot or a blue dot, and you're not going to blindly take them with the anticipation that the market's simply going to move in the direction of that dot because the dot says it will. You see how complex the market is and how difficult it is to call a market direction. So we really back up our software with a lot of extensive training. If you buy the software, we have proprietary videos, and then we have it's really broken down to all personal mentorship with me. I mean, we at first we had anticipated doing some groups, and we did some groups, but they just didn't work out because the problem with groups is that everybody's at a different level. We have some people that come in who are very, very novice traders and don't really have a good grasp on what a moving average is. And then we have others who come in and they're very advanced traders. They've been around a long time and they're looking for that final step to profitability. They don't want to listen to what a moving average is. So when you put people into a group, it's very difficult, and it can be annoying for those people who are more advanced, and difficult for those who are novice not to get the basics. So basically all of our mentorship time is spent with me alone. And we do that in a hot com room. We do it over Skype, or we do it over the phone. And you're to get at least 2 hours of personal time with me, 4 or 6 if you need it. I mean, our goal here is to make you a profitable trader. Now, we've always planned on doing educational seminars once a month. We just haven't been able to get around to it because we've been so busy with the AutoTrader, and we do so much education in our live trading room that we just haven't really had an opportunity to schedule one of the educational seminars on a monthly basis. But the one thing as part of our philosophy is that we never ask you to pay for boot camps. Because I always see these people advertising, come on into the room and we'll give you, we'll charge you $1,500 or $2,000 and we'll jack you up with a boot camp. And we don't believe in that. If the basic, if what you buy isn't good enough, then it isn't good to buy. So we're not going to ask you for additional money for boot camps. We never ask you for more money for seminars or lectures. And we constantly upgrade the software, and we never charge you for upgrades. All the upgrades that we do are free for life. And we do a lot of upgrades. And we just believe that, that these are yours as part of becoming a member of the Right Line Trading family. Now, normally, the Right Line Trading order flow exact entry system, the video tutorials, the 2 hours of personal mentorship is $29.99. And the 8 hours of personal mentorship is $49.99. But we're going to discount it. And we're going to take $250 off of any software package. So the $29.99 is going to be $27.49. And if you go to the website, you're going to see a link that says webinar attendees only. And it's only going to be for the people in this webinar. Now, we have such confidence you're going to like it. It comes with a 7-day money-back guarantee. If for any reason you don't like the software, you let us know, and we'll give you your money back. It also comes with 2 months free in our live trading room. It's $249 a month if you buy it by the month, but you get 2 months free with the software package. And also, you're going to get 2 months free use of the AutoTrader. We're going to give you the AutoTrader signals, just like as if you leased the software or you owned it. And again, this is available only on the webinar's attendee only link on the order page. Now, what I want to do now is drop the slides and actually show you our platform. So hold on one second, and let me reshare and bring up our software. Now, can you see that? Hold on one sec. Okay, good. Now you can see that on the left is the Russell, and on the right is crude oil. Now, there are a few things that you're going to notice here that are present on the chart that I didn't really discuss. The first is you're going to see the AutoTrader trades. The AutoTrader took 4 trades today. The AutoTrader will trade a yellow 50. The 15 is up. The 50 was flat. The candle's outlined in blue. And the AutoTrader took it up. And this was a 43-tick AutoTrader trade. We should have been in this trade, but I'm just showing you what's already a pre-formatted or a pre-taken AutoTrader entry. Now let me get rid of some of these lines. And what you see on the chart is really pretty much exactly the same thing that I showed you in the webinar. Now we only have one additional entry, which is a bounce off the 50, and that is another type of trend trade. I don't want to kind of overwhelm you, but here's the big move up. We then get a retracement down to the 50, and then a bounce off the 50 with a power entry. This is the only thing that even closely resembles that of a counter trend trade, because it's against order flow, stochastic, and momentum. It's the only trade that we have that's like it, and a lot of our traders don't take them, but I like them. If they come right off the 50 is sloping up, we get nice buying conviction with a big candle body to the upside. Some of these move remarkably far. And a lot of times, these are going to be multiples of fib retracement numbers. And that may be one of the reasons why they're so successful. But these bounces off the 50 work great. Now here's an AutoTrader generated break of the 50 to the downside. You can see the 15 is down, the 50 is down, the candle's outlined in yellow. The AutoTrader took it. The entry is one tick below the close of this candle. And this was a 11-tick trade. And you've got another trade to the upside. Here's your now again, we can't take this trade because on this candle the modified 15 is yellow, and we have to have the 15 and the 50 both moving up to take a long trade. We have to have the 15 and the 50 both moving down for a short trade. There's another, I think this was today. This was a gorgeous break of the 50. Right there's order flow, stochastic, and momentum. You can see the candle surrounded in yellow. Now what we do is we look at the distance between the 15 and the 50. We want that to be less than 12 ticks, and that is described in the upper left-hand corner under MA diff. Now you can't, it will not roll with the scroll bar, but you can see that there's only 2 or 3 ticks of difference between the 50 and the 15. That makes this a very, very powerful trade. And we always, if you want to, you can look at the slope of the modified 15. It will be depicted up here. But we can see that it's red. 15 and 50 are down. It's got the 3-line signal. And what you have here is a really, really beautiful trade to the downside for 24 ticks. Now the thing is, we also have safe zone. And that's only depicted on the, now, so we only take retracements in a confirmed trend on candles that open within this safe zone. This is 19 ticks, 19 ticks. So we've defined risk. We've defined the positive predictive value of each of our entries. Now, I don't know what happened to the slide. I configured it. But one thing that we did look, and we've looked at the predictive value of each of our entries, is that is it helpful to have a 3-line versus a 2-line call? If this candle was outlined in pink, you'd have order flow and momentum with you. If it was outlined in yellow, you have order flow, stochastic, and momentum with you. And what we have found is that stochastic does absolutely nothing to add to the predictive value of these trades. So what we've done is we have filtered out all of the things that don't increase the predictive value of the trade to bring it down to bare bones. So the stuff that you look at on the price bars is only elements of trading that are going to increase the precision of your trades. There's no superfluous junk here. Now, you may ask me, why don't I just take out the stochastic line? And quite frankly, I've thought about it, because it doesn't do anything. Now, think about all the trading platforms that rely on stochastic. Now, I'm telling you, we have defined mathematically the fact that because stochastic is a bounded indicator, And if you think about what a lot of traders do, a lot of traders use stochastic in this way. Every time when stochastic is overbought and the market continues to break pivots to the upside, they continue to buy. While other traders, when stochastic is overbought, sit and sit and sit for the market to turn. So you have half the people looking to sell on an overbought market and other people looking for an overbought market to continue to buy every time it breaks higher and higher pivots. Since if the market's overbought, it shows a tremendous amount of buying conviction. So which of these two groups of traders is right? The ones that continue to buy on an overbought market or the ones that are looking to sell on an overbought market? And the fact is neither one of them are right. Because stochastic does nothing at all if you have order flow and momentum, at least on multiple time frames, as part of the analytics of your trading algorithm. It adds zero predictive value to the trade. We have it right now just because maybe we'll find something for it. It doesn't get in our way because we don't have to look down at it. But we know that if we have a candle surrounded in yellow, or a candle which gives us the 3 lines, or the candle surrounded in pink gives us the 2 lines, or here it's light blue, which is a 2 line, or dark blue, which is a 3 line, the predictive value of those trades are exactly the same. So here is another terrific trade. It's right here. Now, unfortunately, you can't take this trade because of a pivot. We don't trade into pivots. But here's where we get the trade. We have a retracement into a confirmed downtrend. I can pull this over. And we just take a conservative retracement trade. The 50's down, the 15's down. We take the C candle. It's surrounded in light pink, which means what we have order flow momentum with us. We have a ton of things going for us. That this trade is going to continue at least 6 ticks to our first target. And close to 90% of these do. And the thing is that there are lots of times when, because our trading rules are so well defined, that the market will make big moves that we can't get into, but those are moves that we just have to let go. And I can find probably quite a few of those. And that's where the 50 and the 15 simply do not move in the same direction. Here's a trade that we took in the room, right here. Don't even need to mark it out. It already is marked. Let me just get out of that. You can see that you have, again, a break below a red 50, a red 15. Order flow, stochastic, momentum are with us, and down we go for 11. Now the thing is, when you get this retracement, now the 50 is green, and now the modified 15 turns yellow. So we're in a no trade area here. We can't trade. As we move across, we have the 50 green, but the modified 15 is yellow. We can't trade. We just don't have a signal. Whoops. I mean, I really could just do these all day. When I do the mentorship, we'll go over days and days. Sometimes it's very, very difficult to find a loser. Let me just go through this. We can go through a whole day of trading. Let me just show you the Russell 2000. Here's, 1 second here. Here's the AutoTrader for win number 1, AutoTrader for win number 2, AutoTrader for win number 3. The AutoTrader kept taking. Leo, just put our Skype address in. There's a C retracement into a confirmed trend. AutoTrader took the trade, up it goes. Second retracement into a confirmed trend. AutoTrader took the trade, up it goes. Third retracement into a confirmed trend. AutoTrader didn't take it because it's outside of our safe zone of 16 ticks. But if we took it with the discretion that we have, we would have been able to get an additional, at least from start to finish, 13 ticks. And here's another one, right here. We wait for the 50 and the 15 to turn. Now, and this is where we look up at the MA diff. The difference between the 50 and the 15 is only 3 or 4 ticks. That shows that the market has a lot of power. We're at the close of this candle. And up we go. We get very, very, very few false signals. Now, when you're trading with really lousy volume, you're going to start to get them. That's why we have the volume indicator here. And this is simply the contracts traded per day or per session for each market. We wanted everyone to have a general idea of how many contracts are being traded and how many contracts are being crossed. Not something complex, just something very simple. And you can look up and see on the Russell as it can approach 100,000 contracts. You have 50,000 contracts crossed by 10:30 or 11 o'clock. And you're going to get a good idea of whether you whether or not you've got good volume or you've got bad. And I mean, here it is again. You're going to see this over and over again. Retracement. Now this one actually came back 11 and stopped us out. We got a reentry here. Up it went for 15, and then another reentry here after another potential stop out. And I'm not even going to check to see if it was a stop out. So it may have gone all the way, but then you're up to here. So you get 20 and 15 conservatively on 2 conservative retracements into an intact trend. And that's another thing that you will see if you use the software. Over and over again, if you occasionally do get stopped out, because you're trading into an intact trend, it's usually because you get bottom ticked in an uptrend or top ticked in a downtrend. Like this wick came back to take us out at minus 11 with a 10-tick trailing stop. But the trend is intact, so you look immediately to re-enter the trade, and you're usually going to get at least 1 and sometimes 2 trades right back into the trend. So if you get a loss, you get your money back. And unfortunately, it takes 2 winners to make back a loser. But you know, that's just the metrics of it. Since we scale in and scale out of our trades, it's tougher to make up, and that's why you can't trade 50-50. You got to trade 75% or better. Here's another perfect 3-line break. This is a 2-line break. Really nice move. So what I'll do is I'm just going to stop here and see if there are any questions. Because really, I mean, this is really the whole system. It is not difficult. And the learning curve on this is really, really quick. And really the key is to stay with the trend, let the fractal indicators point you in the appropriate direction. The 15 and the 50 are going to clearly define which way we want to go. When they don't align, we don't trade. When the 50 and the 15 align, we look for either a break of the 50 or we look for an early retracement and then down into an intact trend. We get stopped out, we look for a re-entry into an intact trend. When we pass that 19 tick safe zone, then we're no longer looking for a retracement. Then we're looking for the move to pull all the way back to the 50. So we've defined all of our trading parameters, and we want on a break of the 50 or break of the 15 the distance between the 50 and the 15 to be 12 ticks or less, and that's defined by the MA diff, the 22. And all that is what we're doing with this is how we have dumped stochastic. And by looking at 1 year of market replay data, defined overbought and oversold in market structure terms. And here's what it is. When you enter a trade above this hatch line here, you're going to be entering on a market that's truly overbought and probably overextended. It doesn't mean you can't take it. It just means that you're taking a little bit more risk. If it's a perfect trade right off the 15 and the 15's up 45-degree angle, you can take it. That's the 10% discretion. And that's why pattern analysis is important. Same thing here. If the distance, we don't like to trade when the 15 has opened up a big space between the 50. We like the space to be 12 ticks or less. If the space opens up really wide and the trade is perfect in your judgment, you can go ahead and take a trade with the MA diff 13 or 14 ticks. But you know when it's 22 ticks, you're not looking for a continuation. You're looking for a deep, not looking for a retracement, you're looking for a pullback. You're looking for a pullback to the 50 and a bounce off the 50 or a break of the 50 and then a reversal of the trend and then a retracement into the new trend. And that's really the entire system in a nutshell. Now remember, we're very confident that if you buy it, you'll like it, and that's why we offer you a money-back guarantee. And I don't think you'll. I think that's pretty unique in this business. I mean, I don't consider ourselves. We want to sell software, but I think primarily we want to. I mean, we're traders. We're not software vendors. We don't want to dump software on you and have it wind up on your shelves. We want this to be the system that you're going to use to trade and trade profitably. So let me see if there are any questions here. Sure, I can show you the track record. Let me just bring up the now the data that we've collected on the AutoTrader after a year of market replay data is pretty outstanding. But I don't want to really hit you with even though it's market replay data, because what happens in market replay, even though you think it's like a live market, is not always what happens in a live market. These are the days that we have finally gotten the AutoTrader up and running, and this is what it's done on the 5 trading days that we've looked at it. And this is the combined markets, the Russell, of gold and crude. It does not take many trades because it keeps those trades tight to the 50, and it keeps its entries tight to the 15, and it only takes the most ultra-conservative trades possible, which is the way we configured it, because it's a robot, and you're not looking at it necessarily. So we want to keep the losers to a minimum. Even if it keeps our number of winners down, it's really not about the number of winners, it's always about the number of losers. And so far, it's really a stellar track record. I mean, I think over $1,000 in 5 trading sessions on a robot trading 3 contracts is really pretty outstanding. And that's it's 3 contracts. And that is very, very precise. Will the MA difference appear in the upper left of our screen as it does on yours? It will, Richard, yes. If you own the software, we just developed it. So it just hasn't been triaged out to you yet. But everything that you saw on my screen will. And the MA difference is. So, in fact, the MA difference, I think, is going to give us a nice additional edge. It does not. No. I mean, we can't include commissions because we don't really know what your commissions are. I mean, this is just the trades. And I don't want you to think that we included commissions here. But it doesn't take many trades. So, I mean, it's not going to bring up appreciable commissions. It's not taking 14 or 15 trades a day. It's taking, 5, 4. Yes, it does. Listen, we could do that. I mean, listen, it's going to cost you $15 a trade. So, I mean, on 4 trades, it's going to cost you $60. So, it's really going to cost you, you know, you can subtract that out. You know, that is minus commissions. So, listen, it isn't a big deal. We're not trying to mislead you. We just did not put the commissions in there. That's all. And it does, Richard. It does exit the trades for you. The trailing stops on different entries are different, and we did that in order to optimize the amount of profit. Some of the stops are based upon the slope of the modified 15. Other stops are when it drops below a major trend line, like the 50 or the SMA 50. So each trade has a little bit of a different trailing stop. But once it's engaged, it manages the entire trade. It takes your first 2 contracts out at 6, and then takes your third out on a 10-tick runner. You do not have to do anything. Because it's brand new, Tony. I mean, we've been working on it for months, but we only have it on a live market since February 19th. I mean, we have reams and reams of data from Market Replay. I mean, just an enormous amount. But we just got it configured. We've just put it on a server, and we have just started getting data from a live market. That's why we only have a few days of data. Again, I could put up a bunch of additional days, but these are the only days we've traded it live. So this is the only information that I can give you right now on the AutoTrader in terms of actually trading a live market. But it is taking trades on crude, the Russell, and on gold. And we're going to continue to build it out. We're going to build it out to take trades off the Forex. We're going to build it out on the YM. We're going to build it out on the Dow. What is the Dow? We're going to build it out on the NASDAQ. I mean, we're going to, you know, put it into different markets. VPS, I'm sorry, Theo. I need some help on that VPS. Yeah, that's how we run it on the server. Correct. That's exactly correct. I mean, in order for us to get it into your, to get the trades into your NinjaTrader as fast as possible, we have to put it on a really, really major server, we have to put software into your computer that'll interpret the signals and put them into your trader and read them off the server. That's it. Thank you, Leo. So with the software comes 2 months of the AutoTrader, 2 months in the live trading room, and the mentorships and the videos. And again, it's got a money-back guarantee. If you don't like it, you can just give it back. Any other additional questions? Anything else that I can clarify for you? Now, the other thing is, if you just simply want to come into the room and see how we trade, everybody's welcome to come in. We offer free trials to everybody. Just Leo, can you put the link in for the free trial? We're going to put the link into the room now for the free trial. You can come in for the rest of the week and just watch us trade. So just hang on 1 second and we'll do that. Now now this special for this webinar will be active through Friday. So you have until Friday after watching us trade in the room to decide whether you want to make the commitment at the price with 2 months in the room and with the AutoTrader. Just go to rightlinetrading.com. You'll see the link to sign up to our trading room. And that's it. Okay, well, listen, I really, really appreciate everybody coming. I hope our system is clear. Just put our phone number in there, Leo. You can give us a call anytime you like. Send us an email. Our pleasure. I mean, our mantra is, the more information you have about the system, I think, the more you'll like it. In 10 years in trading, I've never seen a better one. And I don't think there's anything that's going to bring you to profitability faster than this will. All right, everyone, have a wonderful evening. Thank you for your time. I really appreciate your coming. Call us, email us, info@rightlinetrading.com. And we appreciate it. You got it, RW. Let's go, Right Line. We'll be in the room tomorrow at 8:45. Everybody have a wonderful, wonderful evening. Take care.